I'm Matt Bouchard with REIT.com, and I'm here in San Diego for REIT World 2012. Joining me for this episode of CEO Spotlight is Tom Lewis, the CEO of Realty Income Corporation. Tom, I wanted to start with a subject I'm sure you've been asked plenty about, the deal with American Realty Capital Trust. Can you give us an update on where the deal stands and what's going to be the biggest benefit in your eyes to your company's shareholders?
Sure. Well, the ARC-T transaction is about $3 billion, and the proxy's been filed with the Securities and Exchange Commission. We'd anticipate we'll be out to both sets of shareholders in a few weeks and hopefully close this by the end of the year. Primary benefits are really several things. One is size. We'll add about 507 properties to the portfolio. It'll move us to about an $11.5 billion market cap. Most important is the quality of the cash flow. About 75% of the revenue that will come in from these properties is from investment-grade tenants. It also really grosses up to about 3,500 properties and diversifies the portfolio by industry, by tenant, by geography, and of course what you always want one of these to do is be profitable to earnings. So it'll add about 20 to 22 cents a share to earnings, which should allow us to raise the dividend about 13 cents a share when we close on it.
And you touched on this a little bit. One of the advantages of this deal, as well as some other acquisitions you've done, has been diversifying your tenant base. How important is that as you weigh the pros and cons of a deal, the existing tenant base, and what do you do? Can you describe your overall tenant mix right now?
Sure. Diversification is very important. The only reason to invest is to get a return, but it needs to be risk adjusted. How much risk are you taking to get that? And diversifying your cash flows is one way certainly to reduce the risk. So with at the close of this transaction about 3,500 properties, leased to 150 tenants in 50 different industries, it really allows us to be diversified. And then you break that down further by industry and tenant, it's just great for us. If you look at the property type, about 85% of our revenue right now comes from retail properties, and then about 15% really from distribution and industrial and manufacturing leased out to large Fortune 500 type companies. Post-transaction, about 77% retail, and then the balance these other areas. So diversification is a primary area that we're looking for, and if we can do that and build the cash flows, then we normally think it's a good transaction if we've paid the right price.
And within your portfolio, are you seeing any particular strengths or weaknesses within any segment of the retail industry, for example, casual dining? And what do you do to manage those risks that I would imagine change on a fairly regular basis?
They do. Right now the portfolio is very strong. Occupancy is about 97%, and it's never been below 96%. And we think most of that comes from the majority of the revenue coming from tenants that sell non-discretionary goods and service people have to buy at a relatively low price point. And that's been a common theme. But looking at the consumer today is very, very interesting. If you look back over the last few years and divide the consumer up between the upper income, middle income, and lower income, and then their non-discretionary spending, things they have to buy, and their discretionary spending, things they just like to buy, there's a stressed consumer out there today. The people at the top are doing very well, and retailers that focus on them tend to do well. If you look at those at the bottom, they're very stressed consumer buying only non-discretionary goods, and you want retailers with a great value proposition. And where the real tough part is in the middle, which is non-discretionary items to a stressed consumer dealing with unemployment and lower incomes. And so casual dining that you mentioned is a great example, but it's really discretionary items where that consumer, when they feel stressed, can trade down. And that's really what you want to watch. Fortunately, it's a fairly small part of our portfolio.
Tom, thank you so much for joining us.
You bet, a pleasure.
For more on this and other REIT news and analysis, be sure to visit REIT.com.